Well, welcome back to the Buyer's Agent podcast, where we help international buyers and future homeowners navigate the realities of buying a house in Portugal. Today, we'll be diving into a very important and sometimes, well, not sometimes, actually often misunderstood topic for anyone planning to move or to invest in Portugal: taxation. But lucky you, I'm not doing this today alone. I brought with me two experts who are going to help us untangle some of these topics. So let's start today with Celia Vance. Hi, Celia, how are you?
I'm fine, thank you.
So Celia is a certified accountant. She's got more than 25 years experience. She's acting as a trusted advisor, especially for international clients. She helps both businesses and individuals manage their tax and financial affairs in Portugal. She's also the founder of Algarve Assistance, where it's a company dedicated to supporting foreign residents here in Portugal with practical day-to-day services and legal compliance. And she is also the CFO of Aqua King, so quite the busy lady. So thank you very much for coming today. Huh?
Thank you, Maya.
All right, now we've got Dan Anderson here from who's a partner at Blevins and Franks, who's a cross-border wealth management company. Dan helps clients structure their global assets efficiently, and that will include tax and estate planning, pensions, investment, prior and after they move to Portugal. Correct?
Spot on.
Fantastic. Yeah. A little unknown fact with Dan that he shared with me is has the lowest senior handicap in Portugal. So for all you who love golf here, I think that means something. I don't know what I was the most impressed by.
Well, it means I'm old.
The lowest score or the fact that you were in the plus 50 category, I have to say, I was quite surprised by that.
Getting old, yeah.
So we'll be talking about a lot of topics today. We're going to talk about crypto taxation. We'll talk about holding assets in blacklisted countries. What does that mean and how does it affect you? We'll try to get an update on the NHR 2.0, which have been renamed, and how to prepare with the post-NHR era. What are the common tax myths that people have? Is there any new tax schemes that people don't know about and should take advantage of? And I want to, at the end, talk a little bit about the difference between Portugal and Spain. And we'll touch a little bit on the Beckham law and what's happening on that side of the border. And I really hope that through that conversation, we'll be able to clarify a lot of topics for you guys. All right. Let's start, because that's going to be a very long session, I think, today. We're going to start talking about crypto laws, because we know that we've got a few crypto holders. Portugal's been always seen as a friendly destination for crypto holders. So, Celia, can you give us a little bit of an overview on how crypto assets are currently taxed in Portugal?
Okay, so we are still a friendly country. If people hold the cryptos more than 1 year,
yes,
they will be tax-free. Okay. If they do it as a business, they have to pay tax.
Okay.
But the only thing that people has to be aware is even when they sell the cryptos more than 1 year, they have to give this information on the Portuguese tax return.
Okay. So although it will not be taxed, they have to declare that revenue.
Yes. So it's quite important to have the record. I think this is what people sometimes do not have it. The record to fill in on the tax return.
Okay. And you said, if you hold it for 365 days, it's tax-free. And if you do it as a company, then you have to pay tax. But what if you're an individual and then you hold crypto and you trade crypto? Well, as an individual, you haven't started a company. What is the situation? Do you fall under the company category and will be taxed?
So it's depending. If you decide to have a business, like a business, you don't need to open activity. Okay. You don't need to open a company, but you need to open the activity. Okay? And then you will pay tax again.
Okay.
If it is just like the stock market that you buy and sell, you have to pay 28% on the gain. Okay. It's how it works, the cryptos in Portugal.
How would you say Portugal compares to other European countries?
So it's more or less the same. Germany and Belgium, they have the same as us. If the person holds more than 1 year, they don't need to pay tax. If then they buy it and sell in the same year, they have to pay tax. So I think this is more European. Okay.
An agreement
of everybody, because we were in the past very, very friendly country to the cryptos.
Yes, absolutely. No, it was basically tax-free whether you were trading or you were holding.
Exactly.
Okay. Is there any report? So you said about the reporting requirements. So that's on the tax. There's no, because you say if you're independent, there's no green receipt or anything like that.
No.
So it's just at the time of doing your tax return, there is a line crypto, and then you just have to give your
You have to fill all of the details.
Okay. All right. Any other things that people should know about?
No, I think the main point here is really to have the record. And I think it's what is more difficult in crypto. Usually people don't have the record.
Yes.
And then it makes to fill the tax declaration very complex. On these days, there are already softwares that they can give you the record from all of your wallet.
Yes, because the reality is if you go on to the online platform, Nexo, your Binance, etc., they don't always give you the breakdown. They'll tell you how much you bought and sold, but you won't actually know what is the earnings for that. It's not calculated automatically, so it makes it really difficult actually to know how much you should be declaring.
Yes, especially because it's per transaction, and cryptos, they have a lot of transactions.
Yes,
so that is a problem. But it's already 1 or 2 software Portuguese that they were made really to help us to fill the Portuguese tax return.
Do you know if the Portuguese authorities are currently demanding from the platforms to get to exchange the information?
No, that is not possible yet.
Okay.
Let's see the future times.
Okay. All right. Shall we move on to blacklisted country, Dan? Can you give us an explanation of what is actually a blacklisted country?
Yeah, so blacklisted country sounds bad, doesn't it?
Yes, it does.
Effectively, all it is, so Portugal is saying that the companies on their blacklist they perceive as being tax havens. So you have Bermudas, Bahamas, some of the Channel Islands, for example. So it doesn't mean you can't hold assets there, investment assets, deposits, etc. But the disadvantage is that because they're perceived as a tax haven on this blacklist, it means that the interest or gains that are being accumulated and paid from those jurisdictions are subject to an aggravated rate of tax in Portugal, so a higher rate of tax than they would ordinarily. So I think people just need to be aware of that because there might be more tax efficient locations that they can hold their assets in. So as I say, it's not that you can't hold it just because it's on the blacklist. It just means that...
But normally if you're on a blacklisted country, it's also because there's no reporting. Correct, for some of those. So how do then the authority in Portugal or actually any other European country will know what is holded there?
Yeah, I mean, there's an obligation, as Celia will definitely discuss. There's an obligation on everybody on the self-assessment to assess their worldwide income and gains on the Portuguese tax return. So ultimately, it's that every taxpayer's discretion to disclose the right information. So there is the common reporting standard. So certain countries, well, I think all countries now obligate under CRS to report. So what you'll find is that most countries will hold the tax number and ask where somebody's resident so they can report the relevant income and gains to that tax authority. And Portugal's system is improving all the time, and linking up that information is going to happen more and more. So people need to be very aware of that and be careful about the way they're reporting.
So if they're not reporting, obviously it would be considered as fraud, I suppose. So it's better that they go and be upfront about it, and then they will have a higher. Or they talk with someone like you and they say, well, this is where we are at the moment. Should we change jurisdiction so that we're not in a blacklisted country? Is that how that would work?
Yeah. I already had a client that he received some interest from Bahamas, and Bahamas is a blacklist. And even so, Bahamas reported to Portugal. So,
okay.
yes, so
Okay, so they are now
they
communications
they
among
share
countries.
communication.
Okay.
Even we have the idea that these countries do not share, but they already share.
Yeah.
And the big problem is then the rate is much higher
Okay.
than if it is from in other countries.
Okay.
Okay.
And is that blacklisting list, is it static or does it change year on year? I mean, how do you...
It's a really good question because, I mean, so some of the Channel Islands, for example, you'll have an account holder there and one year it's on the blacklist and the next year it's not.
Yes.
So Finances will review that in Portugal on an annualised basis. So that list can change. So it's really important, again, to be on top of who is on the list and whether you've got assets there.
So is it expected if you were in a non-blacklist country, all your assets there, you think you're doing everything by the book and suddenly it changed hands and it goes in a different list, that you are expected suddenly to move your assets? Because
No, not a different list. And obviously it doesn't necessitate you to move the assets because one of the issues is sometimes in the blacklisted countries, the interest rates are higher. So some people look at the net return after the high rate of tax and think, well, actually it's still better. Yeah. So there's a few things to throw into the mix. But certainly, I think from a reporting point of view, we'd encourage not to be on that list. Or I need a drink of water.
Okay.
People should look every year on the budget.
Okay.
It's where we can see if it changed the blacklist countries or not. From my experience, the only one that we had, it was from I Love Men.
Oh man, yeah.
So it came out and then in the following back in. So it is a problem, right?
Okay. I want to go back onto in terms of the tax rate, because obviously if you are here and you're under the NHR, worldwide assets would fall under the NHR. So a blacklisted country would not fall under the NHR. And you say it's higher, but what do you mean by higher? Higher than 0% for worldwide assets, or higher than 20%? Would it be taxed, for instance, as if it was Portuguese assets?
It is taxed usually. What the investments the people has is dividends and interests. Okay. So the tax will be 35%. Okay, instead of 0 if it is NHR. So people have really to be careful. But it's what Dan told us. Sometimes people look by the net. Yeah. And even paying 35%, they receive more than 0 or 28%.
Yes,
so,
absolutely.
So it's that point of view. But it's not one quite important thing on the blacklist country is when we have companies that holds here properties in the Algarve. Okay. Because if I have a company, for example, let's say in Guernsey, I Love Men, and I decide to buy here a property in the Algarve. So I will pay much more transfer tax, stamp duty when I buy the property. Okay, I will pay much higher tax in property tax. Okay. So people should really look at on that. It's not good set up a company on offshore on this kind of countries, blacklist countries, and buy property in Portugal. It's much expensive. Okay.
So it's not a very good option. But is it interesting? Although we're going a little bit on a tangent here, but I think it's important to talk about that. But if you were to buy your property under another offshore company, but that is not Delaware is the one that keeps
everybody has.
Everybody has. Is that still interesting today to do, or not really?
It really depends. Okay. But from the point of taxation, you don't pay more because if it is Delaware or if it is in another EU country, for example. So black countries is really not good. Another thing quite important from the blacklist countries that usually no one speak about, and it's something that I remind now, is, for example, I have a business and I want to contract someone, and that person, that supplier, is on a blacklist country. So
Okay.
the Portuguese authorities, they don't accept that cost.
Okay.
Okay, and that is something quite important that sometimes people are not aware of this.
Okay. So it's not just about where you hold your assets, but actually who you're conducting business with.
Exactly.
Okay.
Okay, that is quite important when you have business in Portugal and you will contract someone on these countries. Okay, you have to be aware of that because will not be accepted as costs for tax purpose.
Okay. I'm not sure how many companies from the Bahamas you would contract,
No,
but
but some-
it's
but
good for
for
thought.
example, Hong Kong.
Yes, I was actually, I wanted to ask about Hong Kong because I thought it was meant to come out of the blacklist, but it's still on the blacklist.
It's still.
Okay, because yes, indeed, when you talk about Chinese manufacturer, a lot of them have the trading company based in Hong Kong for tax reason, and therefore they will charge you through the Hong Kong companies. Oh, that's a
Okay,
yes,
be careful
okay.
with that.
Okay, well, thank you. That's very interesting to know. Let's talk about myth busting. Very often when people start reading about the journey to come to Portugal, obviously they look into taxation. Everyone goes on Google, and now some use ChatGPT, and they're trying to gather information. And I see myself very often on forums, on social media, some of the questions that are asked, and that they clear misunderstanding. Often people think Portugal is a tax haven, for instance, or that the NHR is just about the 20%, and then that's it. Can we talk a little bit about this myth and try to untangle them and clear them out?
Yes. When the NHR started, the first myth that I had with the clients was, I have NHR, I will pay zero on tax. It's zero on everything. No, it's not zero on everything, okay? If the income it's from Portugal, you have to pay tax, for sure.
So any income from Portugal,
You have to pay
it's
tax.
it's a tax on Portuguese rates.
Yes.
Okay.
Then let's see the abroad incomes. People say, oh, definitely for that one is zero. No, it's not zero. Because if it is capital gains, you have to pay here 28%. Let's say generally, because then we have to always to see the convention between countries. Between countries. So, but this is for the majority of the clients. So in the beginning, a lot of them, then they have to pay 28% on the capital gains.
28.
28,
Okay.
and that was a big surprise.
I imagine. How about dividends? So dividend from a foreign company.
It's zero.
It's zero. So now,
A little bit depends. So, I mean, I think the basic premise of NHR, or certainly the first scheme, is that if an income or capital gains, if it's taxed or taxable at source, it'll be exempt in Portugal. So as Celia says, you have to look at the tax treaty to establish which jurisdiction has the taxing right and whether or not they tax it. And that dictates then whether it's taxable in Portugal. But it is a real myth that it's 0% all round. No, that's not the
I
case.
think there's a grey area. You've got a few people now who are in this situation where they are hired by a foreign company, but they live here. And they're paid by that foreign company. And it seems that there's been a lot of discussion to say, well, yes, okay, you are paid by a foreign company, but your brain and the work is produced in Portugal. And I think there's treaty or not, there seems to be a bit of inner fighting between all the tax offices in terms of who tax what, because let's say you're a UK company, the UK tax office will say, but no, it comes from a UK company, we take the tax. And the Portuguese authority will say, no, the person is based here, the work is done from here. So where are we standing on this?
What kind of income it is? It is self-employment, it is a salary.
A salary.
So that it's already make a difference. If it is a salary, people receive from, it should be paid at source. I think the big problem, and I think a lot of people are not doing it the correct way, and for me it's not already a gray area, because Social Security.
Yes,
And
we'll get onto that, yes.
This is not tax return. Social Security says that when you have a person working here more than 3 months, the company has to do the registration and pay the Social Security, the Portuguese Social Security. And I never saw that happen.
No, I've actually, to be honest, I didn't know that.
Yeah.
Okay.
Okay, so I think maybe in the future, Social Security will start looking.
To be paid. So although your tax will be taken at source, the Portuguese, to try to get a contribution, will say, well, now you've got to pay the Social Security.
Yes.
Okay. And what if you're an independent? So you are, as a consultant, you're billing people on missions.
Okay, so you open here the activity,
Yeah.
and you are issuing degree receipts to the company. So then you have to pay here tax, but then you can, if you have NHR,
Yes.
and if you are on that kind of higher professional, you pay 20%.
Okay.
Okay. So this is quite specific, taxpayer to taxpayer, activity to activity. So
Okay.
it
So
always,
it's not really clear cut. You
No.
really have to look at each situation
Exactly.
to understand what's the best way. The country of origin, I suppose, where the company is based at, the type of work that you're doing, the type of contract that you're doing, and it's all of that will help define
exactly.
what's the best
Yes.
approach.
So it's
Okay.
not because my friend is paying that I will pay.
Yes. And another
Yeah,
myth.
We hear that. Yeah,
You hear that.
yeah, it's quite common.
And another myth as well on the NHR is it's 20%, and then that's it. But actually, it is not, is it?
It is not. Again, Social Security.
Social Security.
Right? So if you open a company and you are not paying Social Security in any other country, you have to pay Portuguese Social Security through the company, right? If you decide to open activity, self-employed, you are 1 year exempt if it is your first time here opening the activity, but then you have to start paying Social Security. So yes, you have to pay.
So it is not 20%.
No.
And I think a lot of people got caught out in the past because when you look at the literature online, you never hear about Social Security. No one knows about it. And then they start receiving their salaries or they start paying their consultancy and they're super happy.
It's quite nasty as well. I mean,
And
the
it's quite
levels,
nasty.
yeah. So it's something that you need to evaluate when you're moving over. So I mean, we're sort of recruiting people from overseas to join the business, and it's definitely a factor. They've got to weigh into their calculations. Salary,
Yes.
tax, social security it's a big impact.
Yeah, both for the company and for the for the
Exactly.
individual, because
Exactly.
it's
The only way that they can be exempt is if they are paying Social Security outside of Portugal. Or through another Portuguese company. So they have always, and then they have to show, to be exempt in Portugal.
So it's interesting. It seems from what you're saying that as long as you can show that you're paying somewhere some tax and somewhere some sort of social security, then you're exempt in the other jurisdiction. Basically.
Exactly, is that.
Okay. How about foreign pensions? Do retirees pay tax on that? What's the situation?
With NHR?
Without NHR? I mean, how does it work?
At this moment, we still have people with pension with NHR that pay zeros and another ones that pay 10%.
10%. Okay.
Yeah, so there's obviously been two schemes. So NHR, the original version, which was pre-April 2020, so that was a zero rate for pensions, and then post-April 2020, the new scheme, new NHR, 10% on pensions. But it's interesting because obviously coming from a UK advisory background, there's lots of different types of pensions. So one of the other big questions, of course, is at the end of NHR, how is my pension going to be taxed?
Yeah.
And that's where things, Celia can probably
Yes.
add. Things get very interesting because depending on how that pension's been funded, whether it's employer-employee, that then dictates whether it's subject to progressive rates of tax in Portugal or some other beneficial treatment which might still apply.
So we'll dig down on the post-NHR and how you should prepare, because I think that's really important topic. But you talk about the tax rate, and that's another myth that I keep reading everywhere on social media. Oh my God, am I going to be taxed at 48%? And I don't think people understand that it's a progressive rate, correct? So can you explain that, and how does it actually work?
So this is a progressive rate. We have brackets, and it's not the income multiplied by the tax rate. Okay, it's not straightforward. People can look by the median rate. That is what they should look, and they do not multiply the income by the tax rate.
Okay. So it's basically, you've got, I imagine, like in most countries, you've got a portion of your revenue that is tax-free, then the first portion that is at the first bracket at a certain percentage, and then so on and so forth.
Exactly.
So actually 48%.
Exactly.
It's only on the top, I think it's above 38,000 a year.
No, it's more.
No, it's more than that.
It's more.
80
80 something.
Yeah.
Oh,
They are
okay.
always changing.
Okay.
That's why I don't have on
Right.
my mind.
Okay.
Yeah.
Okay. So, but to reassure, I think a lot of people who have this misconception, it's not just that flat rate that if you earn above 80,000, let's take that as an example, you'll be taxed 48% on that. Because we see a lot of Americans, obviously, with them who have the double taxation, who are losing their mind, and they see their dream of moving to Portugal, going into
Dust.
into dust. So it's good that we talk about that.
No, just on that point as well. So one of the other things that is oft overlooked is the fact that you can submit joint returns. So you can equalise your income between spouse potentially. So if it's income's weighted more to Mr. or Mrs.
Yes.
and the other Mr. or Mrs. doesn't have such a high level of income, you can actually equalise to submit a joint return. So obviously it pushes it more slowly up
Yes.
those progressive bandings.
Okay,
So that
that's a
can,
good
that can
tip,
actually be a big advantage.
Yes.
Okay.
Yeah.
Another myth is that we see with our international buyers, and they ask us, is if I buy a property in Portugal, will I automatically become a tax resident?
No,
No.
that does not exist.
Okay. So you can buy a property in Portugal. You can come within your rights, and depending on whether you're within EU or not, for a certain number of days, you'll pay your tax on that property, and we'll talk about that in a bit. But you don't become a tax resident. To become a tax resident, you actually have to go through a process.
Exactly. When you decide to come a tax resident, you have to apply, let's say. First, you have to have the legal residence, even if you are from EU or outside.
Yes.
EU, it's much easier. And then you have to go to the tax office and say, I'm here, I want to be a taxpayer.
Okay, so it is really a choice. So let's say you are a EU resident, so you don't have this 90-day limitation. You come and go between your home country and then Portugal. You go above the 6 months. Let's say you do 6 months here and then 6 months in your home country. That doesn't automatically change your tax residency.
Let's see. If you are exactly here 6 months, I think it's better if you be here less than 6 months, okay?
Okay, so it's another grey area.
Let's make
I
it.
think that, the fundamentals are your tax residency legally is based on where you are, not where your assets are.
Okay.
So if you're spending more than 6 months in Portugal, Portugal will be saying, oh, you're tax resident here. But it's also important to look at the country that you're leaving, because they'll have their own set of residency rules. So they might even override. So certainly from a UK perspective, if you're probably spending more than 90 midnights back in the UK, you'd still be considered UK tax resident, even if you're spending the other 9 months in Portugal. So then you have this argument between the UK, the two countries. So it's really important that you sort of look behind you. If you're leaving somewhere, you need to make sure you close the door properly on that residency situation. But certainly if you're doing, as you said, Celia, more than 6 months in Portugal, they're going to be interested too.
The residence is not just the 6 months. Okay, imagine that you are 6 months, it's 6 months.
Yeah.
Where is your main house? We always have a main house, right?
Yes.
So where it is your main house? Where is your family? Where it come your income? From which country?
So I'm going to ask the question I asked.
But this is gray areas,
No,
okay?
yes, because we answered the question earlier on, and then we talking about that, and now I want to re-ask the question again. You are hired by a foreign company who's based, I don't know, in the US, in the UK, in France, but your life is here. Yet we said because the contract and the company is back in the other country, they have their hand on the tax first. But you are resident here.
Yes, but that is different. That is completely different. That is the country that has the right to tax first, okay? And then we said because it says NHR, maybe it can be tax-free, right?
Yes, but if you choose, if you go to the authorities in Portugal and say, I want to be a tax resident in Portugal, and you've been a tax resident, then your tax residency is in Portugal.
Yes, it's the same as rentals. You are a taxpayer in Portugal, but you just receive rental income from UK, let's say it, okay? And you have NHR. You don't pay any tax in Portugal, even being a taxpayer. Another thing is the residency, where I want to pay my tax. I always have to be careful with that. One of big myths that I still have clients like this. Oh, I'm just receiving from that country. I did not said that I left and came to Portugal, but now in Portugal, I told them that I'm a fiscal resident. So they are in both countries as fiscal resident. This can be a nightmare. Okay, this really can be a nightmare because we have two tax authorities that want our money.
Yes. Yeah, and then the inner fighting. So it really shows that, the planification aspect is really, really important. And that's why I said at the beginning, it can't be an afterthought. It cannot be something where you just go and read a couple of articles online and you think that's it. Now I know everything I need to know. They've got to really sort through, because depending on which country, depending on your situation, there's so many variables.
Yes.
It's not a clear cut. It's interesting because obviously when you talk to people, to professionals like you, that's often what we hear. Oh, it depends on the situation. And I have to say, sometimes it can be quite frustrating when you hear that. But now that we're digging into the topic, now I understand why you keep saying that, because it really is not. It really is about the situation.
I don't think we should be putting people. I mean, if you do it right the first time, it's everything's and you've got that clarity.
Yes,
it's a straightforward process.
Exactly.
But the trouble is that a lot of people slip in between the cracks. They don't quite know where they're supposed to be and what they're supposed to be doing.
Yes, or they go online and they ask friends and they ask on forums, information, instead of asking people who are professional, who are within that industry, who keep updated with the changes of law constantly to know what's going on, because something that was okay 6 months ago may be different 6 months afterwards. All right, so now on to our next topic, tax for non-residents. So for instance, rental income. So Celia, can you maybe talk to us about what sort of taxation non-residents have to fulfill?
Okay, so if they have here a property that is more common, they have to pay property tax, of course. And then usually in Portugal, people decide to rental to receive a little money back from the investment. So they can decide to do it through long-term rental income or a short-term rental, IL, what everybody says.
Alojamento local.
Alojamento local, exactly. So from tax point of view, it's completely different. A long-term rental is not activity in Portugal. Okay. You have the expenses. Imagine that you bought the property and you need to do some works on the villa, but your idea is really to rent then. So you can use 12 months before the renting that expenses against then the rentals. Okay. One thing that we have quite important in Portugal that I think it's a little different from UK, for example, is you cannot use furniture, you cannot use laundry, this kind of expensive on rental income.
Okay, for the long term.
For the long term.
Okay, so any bills from purchasing furniture cannot be deducted.
Yes.
So it's only the work on the property.
Yes. I think the simple way to see this is everything that I cannot take out, I can accept.
Okay.
Everything that I can take out from the property, the tax don't accept.
Okay.
It's the simple way
Okay.
to see it, okay? Management we can accept, insurance we can accept, condominium fees we can accept.
Okay.
So,
if you've got a loan, I suppose the interest rates?
no.
No? Okay.
Because to accept a loan, I have to open activity. It must starting to be activity.
Okay.
And we want a really simple thing in
Okay.
terms of tax. Okay? So it's quite simple. We have the income, the gross income from the rentals. We have the expenses. Give it a profit or a loss. If it is a profit, I pay 28%.
28.
28.
Okay.
That's it. Okay. Then I have the short-term rental.
The
IL.
holiday rentals. Yep.
Yeah.
Okay.
One thing that the taxpayer always have to be careful is how it was opened, the activity on the tax office for VAT purpose. Usually people say, oh, I want to be exempt because I just have 10,000. I just rented for 3 months, so I don't need to I should invoice with VAT. That is not true if you are using a platform, Airbnb or Booking, okay? Don't do that. You can really have problems with the VAT, with the Portuguese tax authorities.
Okay.
Okay, I already saw that many times. Okay.
So just for me to understand, if you do short-term rentals, you are actually you need to charge VAT on your rental nightly income.
If you use the platforms,
If you use a platform.
again platforms, yes.
Okay. Now, again, for me being a bit pedantic, but technically you are not the one using the platform. Technically, it's the property management who's using the platform, because most people who are foreigners and have a flat or a house here, an asset, they put it through a management company. And it is the management company who then do all the advertising and use the platform.
Who has the license? The
owner.
The taxpayer, the owner?
The owner.
Okay, if it is the owner, usually the Booking or Airbnb has the name of the taxpayer.
Okay.
Okay, if the license is the name of the property management, that is a long-term rental.
Okay.
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 See the difference?
Okay, understand.
Because long-term rentals is a business in Portugal, and sometimes people forget that is a
Short-term
business.
rental.
Yes.
Okay.
Short-term
Yep.
rental is a business. Okay, they have to have insurance.
Okay.
Okay, it's mandatory. So it's a business, like other kind of business. In terms of tax, I think the best way, to tell you the truth, it's you can choose the organized accounting or the simplified regime. It's the simplified regime.
Yes.
Okay, it's the best thing for you to go. So it's 35% on your gross rents.
Okay.
Okay, and then you pay 26% on the taxable income. It is clear? No.
No. So it's, I thought it was, how much did you say for the tax? 26?
25.
25. So it's 25 on, I thought it was 25.
35 on your taxable,
Okay.
and then 25.
So
35,
25% of 35%.
35% on your gross.
Okay.
Okay, and then you have a rate that is 25%.
Okay.
It is a business.
I understand why it's so complicated. Did you get your head around that? 'Cause-
Trying. Yeah.
So you don't
complicated
have to give to the tax authorities any expenses.
Okay,
No
so there's no
expenses.
expense.
No
Okay.
expenses.
So it's a simplified rate.
Yeah,
isn't it?
it's,
Okay.
yeah.
All right. So
So you receive 10,000.
yes.
35% on that 10,000 is your taxable income,
Okay. Okay.
and then 25%.
That's
right.
really, so they consider 65%
70. Yeah.
to be charges.
Yes, it is really nice.
Okay. All right.
It's still nice.
It is no, but it is.
It is
It's
still-
a massive
it is still
deduction
nice.
if you only tax on 35%
It is-
of your income.
That's why we have so many.
Yes, yeah. No, but but it's very interesting because you keep wondering, why people, I've always had that conversation when we've got buyers in terms of, do I go long-term rental or do I go, short-term? Because the reality is when you go short-term, you have hidden costs that people don't even think about. You need to have a property management. If you do long-term, you don't necessarily need to have a property management. You have to pay the electricity or the utility bills when it's short-term. It's not the case when it's long-term. Usually people who say long-term, they look after the apartments. If you take good tenants, so long-term, you will have a better assets that is in a better conditions. So then you're down to the taxation, and then if you do the up and down. But I was under the impression and knowledge that you had 25% deduction. So 25% of your revenue were considered at cost, and then you were taxed on 75%, But now that I know that it's actually much lower.
Not for the IL.
For the IL.
For example, for accountancy service is like that.
Okay. Wow, that's I have to say I'm really surprised about.
But IL has a lot of little things that people has to be aware. So I think if you don't want to have any problems, long term is really nice. Okay. Short term, you have to make the information to SEF when the clients arrive.
Yeah.
You have to submit, you have to do the invoice all the time.
With the VAT?
With the
so
VAT.
You do pay VAT on...
You have to submit quarterly the VAT return.
Yeah.
Okay. Now, since this year, you have to go online to the tourism website, insert the insurance.
Okay.
So then you have the tax to pay to the council.
Yes.
Right? So more and more things, the IL has a lot of things that people have to be aware.
Okay.
Okay.
And do you find when you have international buyers that come to you and they say, ta-da, I bought a house, I want to rent it. Do you feel that they're aware at all of those things? When they apply for the AEL license, are they even told what are the obligations?
No.
Okay, so it's a guessed game basically for them.
It is.
Okay. So what are the traps that they can fall onto in terms of being outside of the law when they have an AEL license? Is that reporting issues? Is it not doing an invoice with the VAT?
The main problem is they are exempt of VAT. The way that they went to the tax office and they say, I want to open activity with exemption.
Okay.
That is still have a lot of clients.
Okay, so that needs to be changed.
That needs to be changed. Because if you're saying that you are exempt, when booking or Airbnb the invoice to you, you have to go and pay VAT to the tax office.
Okay.
It's not good. So this is something that people has to be aware. Another thing is, I don't need to invoice. Yes, you need to invoice. Okay? And we have rules to invoice. Okay? So that is the second thing. I think it's the both important really things.
To know and to remember. Okay. So apart from rental income and obviously you tax on your property, your yearly tax, is there any other tax that non-resident have to comply with?
No.
That's it.
That's it.
Okay. Perfect. Let's talk about new tax schemes, because I know that the Portuguese government is really trying to attract foreign talents, whether it's returnee Portuguese or younger population with a high level of education. I don't feel they've done a very good job at promoting and communicating this tax scheme. So I think it would be a good idea maybe to talk a little bit about what is available at the moment that people can take advantage of.
Okay. So a good scheme that we have, it's for young people until 35 years. It's for Portuguese, for foreigners, if they are taxpayer, okay? Need to be fiscal resident in Portugal. Then we have
working in Portugal,
yes,
earning a living.
This has So you have benefits in terms of tax if you are working, but imagine that you are a taxpayer because you have a rich father, let's say it like this.
Yes.
Okay. And you want to buy a house here. Okay. And you don't need to pay transfer tax, for example. If you are young, you don't need to pay stamp duty.
Okay.
When you buy a property, you don't pay the registration of the property.
Okay.
So it's really good.
And that has to be all done until the 35th anniversary, basically.
Yes.
Okay. I think there's also something towards the mortgage as well. They have some advantage on mortgage at the moment.
Yes, they don't need to put any capital, so the bank can give the 100% of the mortgage of the house. It is, but if they are not working, it's not good to get the mortgage.
Obviously. Yes, I imagine that they need to.
Unless they've got a rich father.
Yes. Is there any other attractive schemes that we can talk about?
Yes, we have then one, I think it's more for the Portuguese, but whatever the law doesn't say, is who decide to come back again to Portugal, to live in Portugal.
Okay.
Will have benefits for personal tax income.
Okay.
And then we have the new NHR 2.
Yes, we're going to get onto that. NHR 2.0, what's the actual name of it? Because everyone called it 2.0, but there is a name.
EFC.
Okay, we'll stay with NHR 2.0 so that I don't sound too weird talking about it. There's been a lot of talk. We've done a lot of research. We're looking at Google. We even asked ChatGPT what is 2.0. I think even ChatGPT bugged a little bit in terms of giving us a straight answer. So I'm turning to you two. Where are we on NHR 2.0?
Agree.
Yeah, I think we're in agreement that we're not entirely sure. I mean, we're certainly aware that NHR is underway. There have been applications submitted and accepted. The big question is around eligibility. So with the old NHR schemes, it's very straightforward. As long as you hadn't been tax resident in Portugal in the previous 5 years, you'd be eligible in simple terms. So it was very straightforward. Whereas with the new scheme, the criteria are very specific. So whether it's opening a company and that company being categorized in the right way, have you got the right academic qualifications? So there are a range of aspects that need to be considered. And I think we had a quick chat before the podcast began. And I suppose the way I look at it is that with the old NHR scheme, it was introduced in 2009. It probably wasn't until 2011, 2012 that it began to get traction and interest. And I think there's probably a little bit, my personal opinion is I think there's a bit of water to travel under the bridge before people have got the confidence to move ahead with NHR 2.0. But we're coming across more and more people that are interested to learn more about it because the tax exemptions are fantastic. So with the old NHR scheme, we talked about exemption of tax on income, but not gains, overseas income, but not gains. But with the new scheme, exemption on overseas gains as well. So that's going to generate an awful lot of interest for people potentially looking to offload businesses, sell businesses, property, anything that is capital gains taxable. All of a sudden becomes a very compelling opportunity.
And then if that was the case, would they have to do that before they come, or would they have to do the sale of a company, for instance, after they have acquired the NHR?
Well, that's a brilliant question. So it would have to be after, because they'd have to be tax resident in Portugal. But it's one you've got to be really careful with as well. So, for example, if you're selling a business in the UK and let's say letters of intent had already been agreed for that sale while you were still, even if the sale hadn't happened, but the process was well underway, there's a conversation that HMRC, Revenue and Customs in the UK would want to have to say, okay, when it actually transacted, you might have been out of the UK, but the whole agreement and the sale process was done while you were still here. So it's a really relevant question, and anybody in that position needs to be belt and braces that they've got the timing just right.
Okay. When do you think we're going to have a little bit of clarity on the, has the government set any dates in terms of ratifying the scheme and having it really available? Or is it already available?
Yeah, it is.
It is available.
Yeah,
Okay.
Okay. But I think the law is not really clear.
Yes.
So I hope that we have some information from the tax office.
Yes.
Because it's really need to have that information to really understand and to advise the clients that the foreign income are exempt. If not, in my opinion, we are in the gray area.
Okay.
Okay.
Yes. And then you're open to interpretation because I suppose it's each local financer's office that then make the decision, and you can have discrepancies between region where some region interpreted the law in one way and others in another way.
Correct.
Okay.
But even in terms, if you go then to court, I'm not 100% confident that the court gave reason to us.
Okay.
Okay. So I think it's better wait a little.
Okay.
With that doesn't mean that people should starting to talk with advisors because it's a more complex regime. They have to apply for the legal resident. They have to become a taxpayer. So there are a lot of steps in this regime. So they can starting to look to see if it is good for them. And let's see, maybe in end of this year.
Okay.
I hope we have some more
clarification. Yes. Okay. And I've asked you the question offline, but for the people watching us, I'll ask again. If you are currently under the NHR, is there a chance that you could apply for NHR 2.0?
So,
we had a clear-cut no here.
I'm not a lawyer, but I went to a training.
Okay.
Okay. With experts.
Okay.
Still, what they say, it's a gray area if you didn't benefit yet from NHR 0.
Yes.
Okay? Imagine that you just ask, but you didn't even fill the tax return, or then you move.
I'm in that case. I
you
applied for NHR when I came, but all my earnings are Portuguese based.
Yeah.
I haven't actually used it at all.
So
there may be a good news for me.
I think it's something that we have to wait still.
Okay.
Because the door is not closed.
Okay. So that's a potential. We don't have a clear cut, yes or no.
Yes.
But that could be and that's something I suppose they will clarify at some point
so, yes.
as well. Because otherwise we'll all end up in court, asking for
We are very good to go to court. Because of fiscal reasons.
Yes.
But usually the taxpayer win.
But for the NHR, there was a lot of people who were not made aware that they were eligible for the NHR, and that they had the 5 years. And when they went to apply, when some friends told them, "But you could do the NHR," they were refused it, and they ended up going to to court, and everybody, I would believe, won the case because they were within the 5 years. So okay.
I think the tax office, they already accept if you make the request now. Imagine you did not apply for the NHR in the deadline.
Yes.
But I think now they are accepting because it's so many times to court and they lost all the times. So you still can apply. But I think there are still people that are not aware of that.
Of NHR.
For the old scheme.
For the old available. Imagine you came in 2022 and you did not apply because you did not know. You still can apply today. Of course, it's not from today, 10 years. It's the remaining years.
But today you can still apply for the NHR?
Yes.
Interesting. I didn't know that. I would have thought that they would have stopped that because you've got...
I thought there's a deadline of 2023, no?
That is another thing.
Okay.
That is, I arrived in 23, right? And then you have that transition law.
The transition,
Yes. But another thing is, I forgot. I didn't know that I have to apply until 31 of March. But I'm still if I had applied, I'm still during the 10 years. Okay. You still can apply. Okay, because the tax they lost all in the court, because what the court says is that is just a declaration. So that because you didn't submit the declaration on time doesn't mean that you don't have all the qualifications. And it's true. So people should do it.
So if they've registered as tax resident prior, they've still got an opportunity.
Yes.
Okay.
Interesting. Well, that's good. That's good to clarify that point. So I thought that's it. The train had gone. The train station. I left the train station.
Yeah.
So we'll wait and see on the NHR, and then maybe we'll come back for another podcast when we've got all our answers. Now, and I think probably it's more for you, Dan, as well. Let's talk about the post-NHR era. Yeah. You've gone through your 10 years. Yeah. What do? You pack your bags and leave?
Some people think so, yeah.
Yes.
Some people think, that's it, I'm off. It's really, I've been here for 11 years in Portugal advising. And so I've always been here when the NHR framework has been around. But obviously, one of my phrases, don't let the tax tail wag the lifestyle dog. And what I mean by that is that tax shouldn't be the driver really of where you live. I mean, for some people it might be, for most it's not. They want to live in Portugal. They love everything that Portugal has to offer. And it'd be a dreadful shame if at the end of their NHR period, tax sort of forces them to leave because they haven't done the necessary planning during that period. So my message to anybody that's moving towards the end of their NHR period is to make sure they take full advantage of what it offers. So the exemption on pensions, dividends, for example. And there are ways to, if you like, change the nature of the income that's being produced. So Portugal, as Celia well knows, has a schedular tax system, and certain types of income will be in that schedule will be subject to progressive rates of tax, which, as we've established, can be quite high. But others are still very low. So investment income, for example, is very tax effective. So if you plan carefully, for example, use your pension funds during that NHR period and then put them in the correct vehicle that you can be tax efficient thereafter, it's still a fantastic place to be from a tax perspective. We've talked about it already. There's no exit tax, no wealth tax. You've got no exit tax, I think we touched on. So it's still a real fiscal paradise, but you've got to get that planning started during the NHR period.
And when is that? Well, how early would you advise people to start the planning?
I think as early as possible, because I think it's important that they're sort of signposted in terms of, if the advantages are going to be lost at the end of 10 years, the earlier that you know your plan's in place, the better. And to be honest, that's where it's more impactful as well. So the earlier you set those plans in motion, the better. Okay.
Thank you. Is there any other opportunity or structure that people should consider as an alternative to the NHR?
No,
I
don't remember it.
No.
I think that's it.
Yeah. Perfect.
That's what we have.
Anything we need to know that I haven't asked you about the NHR before we move on to our last topic? I think we've been pretty thorough, but...
No, there's a few questions sometimes if people haven't got NHR, what they might consider doing. So we talk about the new scheme and the difficulties about eligibility criteria. And an often asked one is that a lot of the demographic here in the Algarve particularly are in retirement. So many will have private pensions. And I talked about the schedular tax system that Portugal has. And potentially outside NHR, if they actually look at their pension situation, and it sounds a bit counterintuitive, but if you fully encash a pension, it falls under a different schedule in the Portuguese tax system, and that can often be tax advantageous.
Okay.
So even outside the NHR schemes that we've talked about, I think there's still really good planning opportunities for people to move here.
Okay, thank you. Well, we're going to get on to our last topic. I wanted to raise it to both of you because it came into my attention whilst I was going through the news. When we get approached by international buyers, particularly if they are really at the beginning of their journey, very often they're between a few countries, Italy, France, Spain, and Portugal. And very often there's this competition between, Portugal and Spain. And they'll compare food and they'll compare culture and weather. And
house prices.
Yes, exactly. House prices, of course. Why did you say that?
Because there's better properties in Portugal.
Indeed. And they looked at the taxation. But very often when people look at taxation, they looked at the tax rate. And there's been a few, I'll call it what it is, a bit of a scandal for me, following one of the tax schemes that Spain offers, which is called the Beckham Law. And we won't get into the details because we're not here to talk about Spain and we're not expert in it. But in short, the Beckham Law is there to offer tax reduction for working foreigners in Spain. And what it seems to have happened is they have attracted a lot of foreigners who started different activities in the country, moved their life, made Spain their home. And suddenly it seems that they are subject to a witch hunt. The tax authorities have hired very persistent tax officers to go after them, who are put on a bonus percentage of how much tax they would get. And there was a very famous case years and years ago, Shakira, everybody knows her, I suppose. And I think at the time, nobody really cared because she was famous and rich and it doesn't concern us. But it seems to be that it's now the everyday people who get harassed. And it seems that it's actually against the British in particular.
Yeah.
Interestingly enough. So that got me thinking, and I started to do a little bit of research to see, is there such thing in Portugal? My research turned out as a no, that there's not been witch hunt, that usually when you're here, you are given a tax scheme you can enjoy for the time that you're given to it. But I wanted to ask you, because you are in it, in the industry, and see if you've heard of anything of such.
No, in Portugal, no. Because our regime, non-habitual resident, it was quite simple.
Yes.
So, no. If people fill in the tax return on the deadline, everything okay, submit, they don't have any problems.
Yeah. So if you don't fill in your tax or you do it wrongly, you may have a fine.
Yes.
But there's not that witch hunt in terms of reversing something that has been given. And I actually sent you a couple of articles, to illustrate that. So the reason I wanted to bring it is there's a lot of aspects that are subjective. You may prefer Spanish food than Portuguese food, or Portuguese wine from, Spanish wine. All of this is very subjective, but I've been an expat for 20 years now and lived in many, many countries. And one of the things I've learned, really one of our cardinal rule now, is go where you're welcome. And I think that's really important because you're moving your life, you're moving your assets, and you want to make sure that the condition under which you made that move remains, And I did wanted to raise that and wanted to hear from you whether I was correct in my assumptions, and I'm happy to say that I'm correct. And is there differences as well from tax, exit tax, wealth tax, which I believe exist in Spain that we don't have here?
Correct. Yeah. So, I mean, yes, Spanish-wise, they have wealth tax on an annualised basis on your worldwide assets, which can obviously be for high net worth people. That's going to be a significant issue.
Yeah. It's the same in France, by the way.
Yeah, it's the same in France. Yeah, exactly. So, when you look at Portugal, it's and the whole welcome thing, I think is a really interesting point as well. So, as somebody from the UK, I think the roots with Portugal the ties with Portugal are very close. And so just Portuguese society generally, I think is very welcoming.
Mm-hmm.
That's my personal opinion. It is subjective. Don't get quite the same feeling in Spain.
Yes.
But from a tax point of view, we do have many people from Britain that do retire to Spain and some have properties there. But some do come through Portugal because of the tax advantages in Portugal. So they'll, if you like, reassemble their financial affairs in Portugal because it's more tax efficient, and then potentially move on to Spain. But what we found is that a lot of those people had that intention, ended up staying here, which is interesting, isn't it? So
absolutely, it really shows that it's a compilation of things that helps you make the decision. There's also, I don't know about Spain, but one thing that's very interesting is there's no inheritance tax here.
Yes.
And I think that's, is that just on property or is that on everything?
everything if it is directly family, spouse and directly family. I think it's one of very good things that we have
It's
still
brilliant.
here.
Yeah.
And what you have to pay little of stamp duty, let's say, but just for what is in Portugal, not what is in abroad.
Okay.
So it's really good.
But another myth, if I may just add in there. So whilst there's no inheritance tax in Portugal, you're often caught by the country that you've left. So again, from a UK perspective, if you're deemed to be UK domiciled, then the UK will reserve the taxing right on your worldwide estate. In the budget in the UK last year, there was a big development there. So if you've been non-resident for more than 10 years, instead of it being a bit of a grey area in terms of whether you're domiciled still in the UK or not, we've now got clarity. So if you've been out of the UK for 10 years from a tax perspective, then you're no longer considered UK domiciled.
Okay.
So that's a huge,
Absolutely.
for people that have been here under NHR for 10 years, if they've got estates that are worth a substantial amount, UK inheritance tax is 40% of that. So that's a really significant development.
And it's a good point you raise, because very often we talk about residency and very few people know the concept of domiciliation. And I think across the world, they're trying to clamp down and trying to claw back some tax, whether it's inherited, because of that denomination. So it's good that they've done this, because if you think about it, if you've got no ties with the country for so long, you should be able to choose the country where you want to be able to pay your tax or your inheritance tax. Okay. Can you talk a little bit about the exit tax? What is this?
Exit tax in Portugal?
Well, what is an exit tax? Because we said we don't have one in Portugal, but there's one in Spain. But what it is that when you
when you pack your bag and move on. So I mean, I'm not an expert in Spanish tax, but from a UK perspective, they have what are called anti-avoidance provisions. So if you left the UK and returned within 5 years, and let's imagine that you'd encashed your pension under NHR, taken dividends. If you returned within 5 years, they'd tax you as if you'd never left. So they'd say, you didn't leave for lifestyle reasons, you left to avoid paying tax. Now, I don't know how the exit tax works in Spain, if it's similar.
I don't know exactly, but I know that they have it, and it's very heavy.
But the point is that you might find yourself, stuck in a jurisdiction because of the exit tax. So it's too costly to leave, but perhaps it's too costly to live there as well because of the wealth taxes that we've talked about. So got to go into these things with your eyes open and get the advice before you go.
Okay. We did cover a lot. Thank you so much. That was really interesting, and I mean, even myself would try to keep abreast of it. Obviously, this is not my, it's not my area, but I try also for our clients to keep abreast of the changes. I've learned a few things today, so really thank you very much. I did try to think of a conclusion whilst we were talking and whilst I was preparing for the podcast, and had to summarize, but I think we've covered so much, I can't summarize it. But I think I would say one thing: tax is not a one-size-fits-all. It's not Primark clothes. So you really have to, go back to what we said. It depends on the situation. Prepare before you come to the country. Don't turn up and then suddenly ask the question. Don't go and ask on forums, people who don't have a clue, who would give you the answer based on their own situation, which might be wrong as well. Go and speak with the professionals. Spend a little bit of cash getting the right answers, because I think in the long run, it will save you a lot of money. Let's be honest. And I think it's not, correct me if I'm wrong, Dan, but, very often when we talk about wealth management, people think, oh, I'm not rich enough. This is really for the uber rich. I don't need to. But I think there's an argument nowadays in the complexity of the tax regime and how they're all fighting and they're not in agreement, to actually take the time to go and see an expert, however big your pot is.
Yeah, exactly. And the point there is that as a percentage of overall wealth, I mean, somebody's might not have quite so much in capital terms, but arguably to them it's more important. So, put it this way: the cost of getting it wrong versus the cost of getting it right and getting the advice is normally huge. So that's why we have a business. That's why we do what we do. So we get it right. We save people money so they don't have these, I suppose, surprises down the line.
Yes. And I suppose you're getting headaches every day, trying to understand the changes and keeping abreast and educating your clients as well, who come with all these ideas or misconception. So it's a bit of
I think my biggest problem now is ChatGPT.
Yes.
Because I'm lucky when he replied the same as me.
Yes.
So it's because I'm right. Okay.
Yeah.
Sometimes I hear this. Oh, it's
exactly.
exactly.
I asked ChatGPT, but it's the same when you go and see a doctor and you say, I've got this and this, and the doctor says, well, how do you know? I've asked Google. It's very similar, I suppose. Okay.
But yes, tax always have gray areas. Okay. There are ones that is simple. There are other ones that is more complex.
Yes.
So speak with the advisor, okay, and come to Portugal.
Yes.
That I think we still.
We always say to our client, we say, there's the law, then the interpretation of the law in each office, and then there's how each individual interpret the law. And that makes, this complicated when you want to get an answer through counsel from the financiers. You talk to one person, they tell you one thing, you talk to another one, another day, you get a different version. Yeah. So better give you the hot potato and let you figure it out for them. Well, thank you very much. I hope you found that really helpful. I'm going to go for a drink now, I think. I don't know about you, it's Friday. I'm feeling really thirsty and it's really hot here in the Algarve. So thank you very much for your time. Let's see what the NHR 2.0 brings in. Maybe we'll come back around that table to discuss it later on in the year. Thank you.
Pleasure.
Thank you.
Bye.
Okay, bye-bye.
Bye, everyone.